Welcome to the last Real Estate Investment Club of the year. We're about 15 minutes into the talk. My apologies for that. We're talking about long-distance real estate investing. And we're going to go through the high-level details of it, and then we're going to go through some specific sites. Thank you to the person who just told me that I wasn't recording. All right. So we just talked about evaluating market trends. We talked about market appreciation, income markets, and hybrid markets. We talked about looking at the local city, county, and state tax incentive programs. Next, we're going to talk about finding, research, and analyzing market data, and then deciding on your qualifying criteria. So what is going to, you should create a spreadsheet. And in fact, I'll give you a spreadsheet at the end of this that goes through and has some of the criteria down for what you're looking for in a market, some of the areas that you're considering investing in, and then if that area qualifies or not. And I really quickly this morning went through Orlando, Florida, because I know it's a good area, and showed what that would look like. And by the way, if you're interested, this spreadsheet is from multifamilyu.com, and it is a website that was put together to talk about multifamily, but this particular spreadsheet applies to any market, either single family or multifamily. And I've put that actually, if you go to the SharePoint documents, right here in research resources. So you can go there and real estate financial modeling. It's right here, market criteria analysis. And the other spreadsheet that we'll be looking at is single family rental and financial modeling. All right. Oh, and for those of you that just joined us on the recording, make sure to check out the July 31st presentation on how to find and buy single family homes. We go over some of the mega trends in 2020. Okay, next, underwrite. The more properties that you can put through your financial analysis model, the better you're going to understand income, the better you're going to understand expenses. What you need to do is learn what income is normal, what expenses are normal, how much is the property taxes, what are the repairs that you're going to need. 8 factors, and then after that, build a business plan. One of the reasons I like real estate as opposed to other investments is that you control the business plan, usually, oftentimes. The same could be said for stocks. Also, when you buy a stock, you go through and you research, what is the company doing? What's the business plan? Are they going to grow over the next 5 years? What do you think of their business plan? Same thing occurs in real estate. You're going to put together usually an LLC, or you might just own a single family home in your own name, but you've got a plan. You've got a plan for buying it, for renting it, for improving the property value. And things that you need to understand are location, what's the income and cash flow, what type of property is it? And by that, I mean income, appreciation, or hybrid. Who are your ideal tenants? What's a normal vacancy rate in this area? Right now, vacancy rates have been very, very compressed in a lot of areas of the country. Like one of our properties right now has a 97% occupancy rate, so a 3% vacancy rate. And that's not uncommon. Occupancy rates are going up around the country. Vacancy rates are falling right now. What is the rental strategy? What sort of operating expenditures are you going to have? So an operating expenditure is a regular reoccurring expenditure. It's your water, it's your gas, it is any maintenance that is reoccurring on the building. It's all those sorts of things that happen on a regular basis. And then capital expenditures are usually larger, not so often expenditures, like replacing a roof or buying an appliance or replacing a heater, fixing the plumbing. These could be capital expenditures, putting in a barbecue area. All right. Next, create a pro forma.
Hey, Daniel.
Yeah.
There are a couple of questions in the chat. One of them is, wouldn't an income market also be an appreciation market? And then the second one is, how do you find out what vacancy rate of an area is?
Great questions. So no, income and appreciation markets are actually quite different. California is an appreciation market, meaning that values there have appreciated to very high levels. However, if you purchase a house in those areas, it's very unlikely that you're going to get a mortgage payment that is lower than the amount of rent that you can get. So in the case of California, you'll have a mortgage payment and it'll be greater than the amount of rent that you can get. So you're in a cash flow negative situation. So in appreciation markets, oftentimes houses do not cash flow. Whereas in an income market, the opposite is true. Your rental payment is usually greater than your mortgage and expenses. So that's the difference in between the two. A hybrid area would be, well, for instance, in a lot of income places, for instance, in the Midwest, you look at places like Indianapolis or Columbus, Ohio, or some of the other locations that are in the Midwest, you'll see that every month your property will cash flow, but your property value has been the same for the last 10 years, or maybe appreciating at less than a 1% rate. So those would be an income market. And then a hybrid market might be areas inside, like the Carolinas, Georgia, some of these areas that are starting to catch more on fire and turning more into appreciation markets. But they're the markets where you'll be cash flow positive, but you've also got 2 to 3, maybe 4% appreciation per year. So it's combining the two. And it's really important to know which type of market you're in because some people need monthly income. Some people are okay just letting that cash sit there and working for them over time for the next few years. Also, if you ask investors, frankly, appreciation markets are markets where it's very difficult to make a business plan for. Let's put it this way. Your business plan, if you're in an appreciation market, is not really within your control if you're solely relying on the market to move the value of your property. I like properties where you control the business plan. So you want to minimize the number of factors that are relating to things that you can't control. And you want to maximize the number of factors that relate to things you can control. So if you find a property that you can fix up, that you can put money into, which is capital expenditures, capital repairs, you could fix that property up. Your business plan has been to add value to that property to make it a better place to live, and then you can sell it. That's a business plan that's completely or mostly within your control. And it's a business plan that maximizes your control as opposed to looking at the market. Depending on the market for your business plan, is speculation, in my opinion. Not everyone agrees about that, but a lot of investors do.
Thank you. And then the second question was, how do you find out what vacancy rate of an area is?
Or to extrapolate that, like you had multiple different fields in that Excel spreadsheet, right? If we have to get data for that Excel, fill up that Excel spreadsheet for different cities, how do we collect the data?
I got to go faster because I'm going to walk through a hands-on of how to do that. But the short answer is there are a lot of websites out there that'll give you information. Whether you can trust it or not is another question. The number one best way to do it is call a property manager in the area. Make a phone call. Say, hey, how many houses do you manage? If it's several hundred at least in that area, say, hey, what's the vacancy rate? And they'll tell you most of the time. And you can even be so bold as to say, what's the ideal type of house that you would like to manage? And then they'll give you their criteria for the ideal type of house that they would like to manage, and then you can go buy that house. So most of the ways that you find this information is either through online sites that you trust, networking with other investors, finding other professionals that are in the field. All right. Any other questions, Dennis?
That's it. Sorry. That's it so far.
Okay. I will go through this a little faster then. Create your pro forma here in the spreadsheet that the other spreadsheet that was in that area, this one. We have an area here called pro forma that gives you a little overview of what your multi-year cash flow projection will be, what your effective gross revenue is going to be, your operating expenses, your net income, and this is all for a single family house, by the way. And then what your net levered cash flow is. So levered cash flow means that you have a mortgage on it. If it's unlevered, that means that there's no mortgage. But a levered cash flow just allows you to increase the percentage of your return higher than it would be if there was no mortgage on it. Show me a stock where you can go to a bank and say, I'd like to borrow 80% of the value of the stock in order to buy the stock. You can do that in real estate. All right. And then, so create your cash flow projection. That's the next tab on that spreadsheet. and then go through and do a SWOT analysis. What are the strengths of this property? What are the weaknesses of this property? What are the opportunities and what are the threats? And I won't go into that. There's lots of information about SWOT. Actually, most of it not relating to real estate. It's just general principle for analyzing strategic decisions. Okay, and then relating to that second person's question, validate your assumptions. And you can do that by calling property managers that are in the area, calling local real estate investment clubs. The Northwest here up in Portland, we have the Northwest RIA. It's a great club. You're mainly going to find people that are flipping homes there and buying single family homes there. So it's a lot of it is related to flipping and holding rental properties. But it's a great club. You'll get lots of good information, particularly if you want to know the landlord-tenant laws. Real estate investment clubs are a great place to go to in order to learn more about that. Call your local banks and credit unions. So credit unions and local banks are ideal if you want to find loans that have different terms than the national large lenders will offer. So a lot of times you can find better local plans or maybe programs that they offer to help incentivize you to invest locally. So call a couple of these. When you buy your property, know who you're going to call for your loan. And then, of course, construction companies and renovation companies. Frankly, if you get a good property manager in the area, they're going to recommend all three of these things to you. So call that property manager first and pick their brain. And a lot of these things will come with recommendations then after that. All right, and then the last step is build your team. So like I mentioned earlier, property management, banks and credit unions, they're going to recommend inspectors, appraisers, repair companies, renovation companies, and usually the property manager will deal with most of that for you, or the bank will set up appraisers and inspectors. All right, lastly, okay, let's go visit some of the places that I find really handy for looking up market data. The first is bestplaces.net. Second is citydata.com. The third is Census Bureau. I would love to hear where you go in order to, this should be in presentation mode. I'd love to know where you go for your data. I just listed these three because these are kind of my go-to places. I can always find really good data here, and it's usually fairly comprehensive. And then based on the data here, I want to ask, let's start an open source project. If you're interested, email me. But an open source project just to pull data from these places and put it together into a nice, tabulated format or some type of format so that people that are inside this club can leverage that in order to do their market analysis. So if you're interested, send me an email and we'll set up an open source project, probably on GitHub. And I like to code on my break, to be honest. All right. And then also, if you're interested in Excel modeling, we're going to put together a good single-family home model. The one that I have here and that I'm showing you comes from a website called Adventures in CRE. And it is a fabulous website if you want to learn about all sorts of real estate modeling. The single-family home model is their simple model. They have models for strip malls and ground up construction and all sorts of different types of real estate investment. All right, bestplaces.net. So this is a great place if you want to get a quick overview of a particular area. I'm going to use Orlando, Florida. By the way, let's see. Orlando, Florida, and it just gives you a beautiful, quick overview of what the area is like. 2.9% unemployment, median home price is $254,400. Median income is a little over 41, almost 42,000. What's the median age? And then if you go down, you'll get really detailed breakouts of cost of living, real estate, job market, what's the crime rate like, what's the weather like, what are the school ratings like, what's the economy like. It's always good to buy in a place that has a well-diversified economy. I was looking at a property actually in Memphis at one point, and it looked great. It hit all my check boxes, And then I went and looked at the economy there, and I went, "Oh, Memphis has got a good economy. It's a hub. It's a hub for different distribution centers. Amazon's got a brand new distribution center that's there. FedEx has got a distribution center. There's an army base not far outside of it." And then I looked at this particular property, and I noticed that it was down on the southwest side of town, where all the casinos are. And I started looking at the property there, and it turned out that about 90% of the people that lived at this property were employed by the local casino just down the street. Well, that shot my economic diversity out on that property, and we immediately decided not to go forward with that property. So know where people are going to be employed in your rental house. Health, religion, stats, voting, politics, commute times, different types of ranking and review systems. So it's always interesting to go to cost of living, find out what the overall cost of living is, the groceries, and let's actually start looking for the data that's on this spreadsheet. I'll close that one down. All right. So the first area to look for, and these are just 5 commonly used metrics. The first is population growth. How has the population percentage changed between the current year and 2000? How has the income changed? Are people's salaries moving up? What's happened to home values in this area? What's the crime trend, and what is the job growth in this particular area? So this data right here, I actually didn't use bestplaces.net. Bestplaces.net is great for getting more of a holistic overall feel for what it's like in this area. You can go through and you can look at the job market here, find out what the most common industries are, and what people's occupations are within this area, what their average salary is within those occupations. So you can see there's a lot of business people, computer people, architecture, healthcare is big in this area. It's just a very good diversified area. It doesn't give you the percentage breakouts of each of these, so that's something worth knowing. Who are the biggest employers in this area? That's something you may have to look up elsewhere. All right, let's go over to city data. Just give you an example of that. This is a more data-driven site, and I love this site because it does a great job of letting you, not only showing you the data like bestplaces.net does, but letting you drill into it a little bit. So let's take our sample here, or Orlando, Florida. Gives you some nice pictures. Apparently there's penguins. All right, and I'm gonna put this over here, put this over here. And the first thing to notice here is that in city data, right at the top, they have the population. What's the current population in 2017? And what's the percentage change since 2000? And if you're interested in where their data sources are, you can go down to the footer area, and they've got a link to their methodology for compiling the data. You can see what's the ratio of men to women. What's the median age? 33. It's pretty young. And 33 median resident age. Florida median age is 42. So Orlando's a younger city than the rest of Florida. What's the median household income? So these numbers you can see, I just took them and put them right over here and right over here. And it gives you the percentage of growth during that time, and either a green or red. The person who put this together down here, his name is Neil Bawa, but he's got a couple of rules of thumb for each of these different metrics that he uses. I'll just make this a little bigger for you. So if the city is between 250,000 and 1 million in population, you're ideally looking for 21.25% growth between 2000 and 2017, 15% growth for smaller cities, and 10% growth for cities over 2 million. So he's got how he ranks it right here. For the median income, he's looking for a 31.5% increase between 2000 and 2017. Medium household, he's looking for 42.5%. And so you can create your own metrics here and then rank these areas by your own metrics. And any questions? Hopefully I'm not boring you. We'll go on.
Yeah,
and look at some of
there are actually a few in the chat. Sorry, it's
Okay.
a little slow to unmute. The first one is, if you're looking in an area you're not familiar with, how do you find a good property manager?
Yeah. Honestly, it's just picking up the phone and calling around. You want to find a property manager that has more than just, a dozen houses. You want to find somebody that's probably in the area of 100 plus houses in that area. So there are a lot of small mom and pop shops that are doing this, or people that are just starting their business. And that's great. I wish them all the luck in the world, but I'm going to go with someone who's got a bigger data set to work from. And so look for someone who's got a large number of houses. Now, if you go in, you're looking for Blackstone or some other hedge fund that has 40,000 houses across the United States, uh, you know, first of all, you're not going to get in touch with their property managers. But if you find a property manager that's really big, you may not necessarily want to talk to them either. You really want that middle sweet spot of people that still hustle to get your business, but have enough data in their business that they can give you great advice.
Okay.
All right.
The next one is, what is your experience / strategy on picking neighborhoods with good schools versus average to bad schools in terms of tenant turnover, crime, appreciation, any other factors?
That's a great question. So obviously, the better the schools, the better it is. I've actually found, looking in data online, that school ranking metrics are terrible. Honestly, I don't believe you can trust most of the online sources for school ranking. And just to put that to point, I live in Hillsboro, Oregon. The school system here is rated, I think, 3 out of 10. But my children go to the school, right down the street. And the year before we moved in, we found out that a new principal took over, and they were getting much higher reviews. So all the reviews. One thing to keep in mind too. Also, if you're looking for apartments, the same thing holds true. If you're looking at ratings down at apartments, a lot of those skew very negative because it's the negative people that want to leave reviews there. It's also um, reflective of potentially a previous owner. So, in the same way with schools, there might have been a previous administrator, there may have been changes in policy. And frankly, there's just not a good rating system for schools, in my opinion. So, I find it very problematic to find good data on schools. Now, crime, there's great data on crime. You can go online, you can find out, property theft crime and then violent crime are the two major categories there. And let's just go to those. Let's scroll down a little bit. Oops. Yeah, here is, I think, a little lower. There we go, crime stats. So city data is pretty good at maintaining crime information, and it disappears as I expand the size of my browser. Here it is. So you can get data like all the violent crimes that are occurring here, and then thefts and arson. And for instance, in Orlando, you can see that I personally would not consider buying in an area unless it was 500 or less on the crime index that city data uses. So you can see 15 years ago, Orlando was a very violent place. And it's interesting to note that over time, it's been trending lower. Now, a lot of places in the US, 474 is pretty good. It's fairly average. And so one thing to note here is that you can look at over time, which direction is it trending? And this might be indicative of better city policy. It might be indicative of investment that has come into that area, and the whole area is gentrifying. But for whatever reason, crime is going down. Hopefully, employment is going up over the same time period. So I would look at the crime data much more than I would look at the schooling data. Although if you can find out that there are good schools, that is a good checkbox on your spreadsheet to have. All right. Any other questions?
Oh, yeah. Any experience with using real estate investment data aggregation sites that charge a monthly fee to find distressed properties? Any recommendations?
Yeah. I had this tab open. Let me say really quickly, Jason Hartman, who was going to be here originally, I don't know if everybody heard this or not, but he'll be here on February 19th. I called him up and said, a lot of people are taking vacation at this time. Let's reschedule you for when we're going to have a bigger crowd. So just heads up on that. Now, in terms of properties that that have, I'm sorry, what was it again? The criteria? Properties.
The distressed properties.
Distressed properties.
So specifically about data aggregation sites that charge a monthly fee to find distressed properties.
A lot of them are not worth it. Some are, but a lot of them are fly-by-night shops. So know who it is that you're subscribing to, and frankly, unless you've got a business plan in which you've got some volume, it may or may not be worth your time. So if you're looking for distressed properties, you can always go, of course, to the county auction site. There are larger auctions. Auction.com, for instance, is a very large, well-known retailer or auctioneer of homes. It can be difficult to find, good deals in those areas. A lot of counties down at the county courthouse, they'll have a quarterly auction or a monthly auction that you can possibly go to. Websites. The problem with these websites is it's difficult to know the quality of their data, and they often charge $30 a month, and it may or may not be worth it. I don't subscribe to any of them personally. I do actually subscribe through a real estate association that I'm part of. I get a group discount to CoreLogic, which is a large provider of data nationwide. So if you need to, look at the county records and filter only properties that are mobile homes or only properties that are multifamily, or vacant land, or land that's improved 10% each year for the last 4 years. CoreLogic is a good place to do that. I would recommend finding a group to get a group discount with, though, because that's expensive. Yeah, I'm not too impressed with most sites that try to sell you data unless they are nationally and well recognized.
Got it. The next one is there a website which lists the rental income by city/county?
Not a good one. That's another one of those questions that you need to go to a property manager for. There are websites out there that do it, but it's difficult to know the quality of their data, and it's much easier just to pick up the phone and call a property manager.
All right. How to evaluate neighborhoods/sectors within a city?
Okay, so one person that we had probably towards the beginning of this year, I think it was propertyradar.com. This is one site that sells data that I don't subscribe to, but they came in and gave a talk. The whole idea here is being able to focus into a local section. City data also allows you to look and to zoom into, go to the map up here, areas based on a variety of criterias. So there are sites out there that will provide it to you. And these can be, I would stay with free ones like City Data, unless you find a really good one. And if you do find a really good one, drop a link to it in Yammer, because I know people in this group would benefit from that. So if you want to find, population overall, or population density per square mile, or if you want to filter by crime, City Data is a really good place for finding all this type of data on a map. So medium year a house or a condo was built. So you can see, hey, these are some of the older areas, or depending on what the colors represent, newer areas, these are probably the older areas. You can get a breakdown here of when things were built. City Data is a really good site for doing this. All right, other questions?
Last one. Any thoughts specifically for California market for renting a house where you live for a few years while mortgage is down significantly, and then rent it while owning a new house? And hopefully the rent then will cover the mortgage.
Yeah. Personally, I don't touch California at all because of the landlord-tenant laws. You can take up to a year to evict somebody in California. And so I don't tend to invest there. I think that the strategy of investing in a area where you live in the house, you fix it up, and then move on to the next house, I think that is a great strategy. But in terms of California, I don't touch it with a 10-foot pole.
All right,
All
that
right.
was the last one.
Let me make sure to put my contact information here. Thank you so much, everybody, for making this a wonderful year. I feel like this club has grown a lot. There's been great speakers here. There's been great questions during almost every meeting. So thank you so much for making this a wonderful club. I'm looking for ways of improving, participation. For instance, the open source project that I mentioned today. If you're interested in that, please contact me. I think that as Intel, we've got a lot to offer in terms of being able to aggregate data and provide a good resource for people at Intel in order to get data from. So I would love to see that happen. Contact me anytime. I enjoy mentoring. I enjoy creative real estate discussions. I have an open door policy. I have a mastermind for people that want to learn about multifamily apartment investing. And of course, I have a podcast like everybody else. All right. And if you want the spreadsheets, go to the SharePoint and go down into documents, and you'll find the real estate resource folder and financial modeling folder. Any other questions? I'm just going to end early because the majority of my presentation is about finding data. And what else down here? And make sure that you put together a team to do your deals with. I actually really enjoy larger real estate simply because I get to work with people that are outstanding at what they do. Single family homes are great, but oftentimes it's you and the property manager. And that is absolutely great for some people. I tend to like working in teams. So real estate accommodates a lot of different investment styles. All right, I will open up participants and chat. Anything else that you see there in terms of chat, Dennis?
There's one comment that says it's my first meeting, really interesting and enjoyed it. And this person's asking you if you work for Intel.
I do work for Intel. Yes, I'm over in IOTG.
And then there's a request to share the SharePoint link for the club and a bunch of thank yous.
All right, cool. I love getting thank yous. Thank you to everybody who sent me an email. I've had some really positive emails, and thank you for those people that have sent me not so positive emails or suggestions. I love getting suggestions. I love suggestions, particularly for improving participation on Yammer in open source projects during our meetings here. I love ideas for changing up the meetings. So if you think that a panel discussion is better than having an awesome guest speaker every week, send your thoughts my way, and I will share them with our entire leadership group too. I need to update this page here, but this isn't just a one-person operation here. Although originally it was, I've had the help of some really great people. Claire here, who is doing all of our interfacing with Intel HR. She makes sure that the guest speakers that we bring in pass Intel HR's requirements, and that we send those requirements on to the guest speaker as well. Oyen has been great here at putting together all of the meeting notes and giving great suggestions during our leadership meetings. Rohan has been wonderful whenever somebody joins Yammer of adding them to Yammer. He's also done a lot of the meeting invites and is putting up the presentations and helping us keep data up to date on our SharePoint site. And we've had a couple of new people as well. One person who has asked me to keep them anonymous. But they have done a really good job helping us. They're actually in the process of helping us redo the previous speaker list so we can make it much easier for you guys to find topics that are past topics. For that person who's new, make sure you check out the video recordings. We put all our video recordings online. Conversations is our Yammer chat group. And then I also want to mention Clinton as well. Clinton is brand new. He's been proactive at giving us great suggestions, and he is helping us find people that will bring in as speakers going forward. And all of these people have been meeting on a weekly basis just for a quick chat to say, hey, who are our new speakers? Do we approve? Do we not approve? What are some ways that we can make this club better? I've really enjoyed building a team here. And my goal is to make it so this team continues to operate if any of us decide to drop out. So self-sustaining club. And thank you to the Next Gen Professionals Network. Thank you to Dennis for all the work he's done in connecting us with Intel HR, getting us up on the public calendar, with all of the work that's been involved in just connecting us, and just always being a good person to throw quick chat questions to. He's great at responding and
My
giving good
pleasure.
advice.
My pleasure.
Right.
Thanks, Daniel. Thank
Yeah.
you for all your effort in this. This has been great.
And stay tuned for next year. Next year is going to be even better. I love this club, and we're going to put we're gonna make it a great club. So thank you, everyone. This is the last meeting for the year. Oh,
sorry,
there's
there
a
are
few.
a couple more questions, and you just answered one of them because one of them reads, "Do we have a meeting next week?" So that's a no. And then I guess the other one is not as much of a question; it's more of a suggestion on having a topic on a deep dive on creating a business plan on single families.
Yeah. Well, and Jason Hartman will be here February 19th. He's kind of a guru in this area, but more hands-on creating a business plan. Let's absolutely do that topic. And also, if you have specific questions, always feel free to email me. I don't like to do real estate stuff over my Intel address when I can avoid it. So contact me at daniel.homlet@Elan Capital. That spelled correctly, of course, would help. elancapital.com. Okay. Anyway, any other questions?
That's it so far.
All right. I don't know why I can't edit this. I'll fix that before I send it out. All right. Thank you so much, everybody, and have a
Thanks,
wonderful
Daniel.
holiday time.
You
Happy
too. Happy
Hanukkah
holidays.
to those who are celebrating that today.